Business loans for cash flow. Get loans from anywhere, anytime. Call 888-653-0124 today or click the link in the description to learn more. Are you struggling to keep up with cash flow? Do you need quick access to funds to cover expenses? Is your business running low on cash? Have you ever needed to borrow some fast cash? Or maybe you just need to raise capital for a new venture? Either way, getting a loan is not easy. In fact, it's almost impossible sometimes. But what if there was a way to get a loan quickly and easily? Well, there is. How much money do you need? Get a clear picture of your finances. The amount of money you need depends on strong revenues and the time you expect to take before you pay back any borrowed funds. The more revenue you have coming in, the less you will need to borrow. And the longer you plan to pay off the loan, the more likely you are to be approved for a larger loan. Your best bet is to work out how much money you need based on your projected revenues. Cash flow lenders will give you a rough idea of how much you can afford to borrow, but they rarely provide exact figures. If you want to know exactly how much you can borrow, seek professional advice from a lender who has experience working with small businesses. You will also need to consider whether you need a personal guarantee to secure the loan. This means that you agree to repay the loan if the company cannot do so. Are cash flow loans right for your business? Consider these factors. A cash flow loan is a short-term loan used by businesses to pay off debts, fund working capital needs, or meet payroll obligations. It's important to understand what type of loan will best suit your needs before applying. Alternative lenders offer a range of flexible short-term financing options, including 1. Flexible terms. Most alternative lenders offer a fixed rate for your loan, with no hidden fees or charges. 1. This makes them ideal for those looking for a short-term solution to finance their business needs. 2. No credit checks. This allows you to apply without worrying about your credit history. 2. Most alternative lenders make lending decisions within minutes and approve borrowers immediately. 3. No security required. These loans do not require collateral, making them perfect for businesses with poor credit ratings. Most alternative lenders offer competitive rates, allowing you to save money compared to traditional bank loans. If you're thinking about taking out a cash flow loan, it's worth considering all your options. However, you must first determine whether a cash flow loan is right for your business. Having a minimum of $15,000 in monthly revenue can also increase your chances of being approved for a larger loan size. What are my top cash flow loan options? There are several types of alternative loan providers, each offering a unique set of services and benefits. Some of the most common include 1. Direct lenders. Direct lenders are companies that lend directly to individuals or businesses. 1. Direct lenders are great for people who already have good credit scores and can prove that they can repay the loan. 1. Because they deal directly with customers, they can offer better customer service than other lenders. 2. Alternative finance companies. Online lenders are like banks in that they offer both consumer and commercial banking products. 2. However, unlike banks, this type of lender specializes in alternative funding sources like cash advances, payday loans, and car title loans. 2. They can help consumers with bad credit, but only offer very limited lines of credit. 3. Private money lenders. Private money lenders are usually referred to as hard money lenders. 3. Home builders, investors, and contractors often use them looking to raise funds for construction projects. 3. Hard money lenders charge higher interest rates than alternative lenders, but the process is quicker. 3. You won't have to wait weeks for approval. 4. Commercial lenders. Commercial lenders are more focused on providing long-term financing solutions for businesses. 4. Commercial lenders often focus on large corporations, multinational firms, and government agencies. 4. These loans are longer term and carry higher interest rates. How do I choose the right one? Cash flow loans aren't always easy to come by, so it pays to shop around. When choosing an alternative lender, consider the following factors. Repayment terms. Repayment terms vary widely among different lenders. Be sure to ask how much time you have to pay back the loan, what payments will be made, and if there will be any penalties if you miss a payment. Interest rates. Interest rates are another important consideration. While some lenders offer low rates, others charge high interest rates. If you plan to use the loan to purchase inventory, then you should look for a lender who offers competitive rates. Fees. Make sure to check the fine print before signing anything. Many lenders tack on additional fees for things like late payments, missed payments, and bounced checks. It's best to avoid these hidden charges by paying extra attention to the fine print. Loan amount. Ask yourself if the amount offered is enough to cover your current expenses. If not, you might need to look into other alternatives. How to qualify for business loans for cash flow. Get approved for business loans fast. The best way to qualify for business loans for cash flow loan is by using cash flow projections along with additional business assets. This includes assets like accounts receivable, inventory, and machinery. Your lender will want to see this information prior to approving the loan. There is a quick application process that most lenders now provide online. Once you complete the form, you'll receive a decision within minutes. Most lenders require a down payment ranging from 5% to 20%. If you don't have adequate collateral, your lender may require personal guarantees from you and/or members of your family. In addition, your lender may also require that you put up at least half of the value of the property being financed. During the underwriting process, your lender will perform a thorough background check and review your business history. They will also verify all the information provided on your application. Once approved during the approval process, the lender will issue a short-term note. You're ready to make monthly payments through an automatic debit process. Banks and credit cards are not always best option. Banks and credit cards are great options for those with good credit scores. However, they are not the only option. You may find better deals elsewhere. 1. Secured business loan options. A secured business loan allows you to borrow money against collateral. Collateral is usually real estate, automobiles, or other tangible assets. You will likely need to provide proof of ownership in order to secure a loan. Some lenders will accept a lease agreement or even an assignment of contract rights. 1. Unsecured business loan options. An unsecured business loan does not require collateral. Instead, it relies solely upon your business ability to repay the loan. Unsecured business loans are less expensive than their secured counterparts. Because you don't need to provide collateral, you won't have to pay any upfront fees. You will still have to prove your business profitability. The lender will evaluate your company's earning potential and future growth prospects. Most business owners use unsecured loans as a last resort because they carry higher interest rates. 1. Loans with no interest or fees. Some businesses choose to finance without interest or fees. This type of financing is called factoring. Factoring involves selling your invoices to third-party companies for cash. Factoring is ideal for small businesses because it provides them with access to capital without having to make large deposits. It also helps them avoid paying high interest rates. Factoring is more common for larger businesses. Larger companies generate enough income each month to pay off the debt. Call 888-653-0124 today or click the link in the description to learn more.